what our pitch always is to clients, which is, hey, look, we're cheaper than hire full-time. And most people don't realize, because we're 1099 contractors, and what most people don't realize is you think you need a full-time accountant, but you probably do not need a full-time accountant. You know, we always say you need accounting outcomes, not an accountant. You need your bank recs done on time, you need your AP done on time, and you need the reporting out to your investors and clients on time.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Mark Kappelman is a CFA, a CPA, and co-founder of realestateaccounting.co. They are dedicated to helping property owners achieve financial independence by streamlining their real estate accounting processes. Mark, welcome to the show.
Sam, thanks for having me. Pleasure.
Absolutely. The pleasure's mine. Mark, there are 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell me, where did you start? Where are you now? And how did you get there?
Let's see. I started by, going to college and wasn't sure. I wanted to be in business. Wasn't sure which major. I had a couple uncles said, hey, accounting's the language of business. You got to understand how to read a P&L, a balance sheet. So if you don't know what you want to do accounting. And you can come out with a CPA. So it's pretty good advice, I think, in hindsight. I did that. Worked in the Big Four, read a book called Rich Dad, Poor Dad, which is cliche for a lot of people, but there's a line in the book that says, why climb the corporate ladder when you can own the ladder? And it totally threw me off. I was climbing the corporate ladder. At that point, I wanted to get into real estate. My wife and I bought a single family home as a rental. Then we started flipping houses. I left the Big Four because I couldn't do both. And then we started rehabbing property. So now we're rehabbing single families. We started rehabbing multifamilies. And in the process of doing that, real estate was my side hustle. I outsourced my own accounting 2 different times, and it just came back poor. The communication was bad. They didn't understand, NOI and what to capitalize and what to run through R&M. And so then we started looking around to say, hey, look, who's just focused on real estate accounting? Couldn't find anybody. And that was where we really got the idea for REA.
And you're absolutely right. You're absolutely right. There is a lot of misunderstanding in that space. You guys decided to form REA, but yet you focus even more, I think, niche inside the accounting side of things than even what the traditional listener might think of when they think of real estate accounting. What is that?
Yeah. So really our niche is property management. When we started the business, the thesis was we're going to help fix and flippers, just because that's kind of what I was at the time. I was rehabbing one house at a time. We had draws we needed help with, and we thought that was the target customer. We actually got in market. We realized the much bigger opportunity and the bigger problems to solve were for property managers, bank reconciliations, accounts payable, and the quality of financial reporting. I think any of your listeners that work with third-party property management companies, they're probably getting a wide variety of the quality of financial information. And we get those financials, are they tax ready or not? And that's where we realized, hey, look, you just can't afford, many of these property managers, the margins are so thin, they can't afford to hire high quality accounting talent. But if you work with a group like REA, you may not need a full-time person. You might need a partial person, and we can bring that really high-end touch at a fraction of the cost, maybe a fraction of the hours, and deliver a better result.
How much property did you have, or were you managing of your own when you decided to launch REA?
Yeah, I think today we're at 40 units. I think when we got the idea, so we launched 4 or 5 years ago, we were probably at like 30 units. I'm managing 30 units in Chicago today. But yeah, right in that like 30 to 40 range.
And what was it along the process of managing and owning your own properties that gave you this insight into the kind of disconnect between property managers and accounting?
I mean, we outsourced our books twice. And I was like, at the time accounting was a side hustle. Right. I'm still working as an accountant. And now I've left the Big Four. I'm working for this tech startup. So I'm doing accounting all day. And then nights and weekends, I'm trying to acquire multifamily and do deals. And then I also have to do the accounting for that. Right. And I'm like, I just can't do this. And, I read the book, I think it's E-Myth. That's like, look, focus on revenue generation, outsource all the admin. So I'm like, accounting is admin to me in this real estate business. my daytime job, but it's still admin over here. So I
Sure.
outsourced it, and it just came back super bad. And real estate, you can go into accounting, but like when people say, are you into accounting? Well, there's a ton of different niches to that, and real estate's just
Right.
one of them. There's very unique accounting things. Not everybody understands a closing statement, a refi. There's all sorts of things that you have to do. So we just realized there was a lack of specialists, and we went for it.
Absolutely. And yeah, to your point, I mean, I've often wondered, you look at the property management companies and it's like the margins are thin. They're
Yeah.
thin there. It's like, how is this profitable? I mean, obviously it's profitable at scale, but it has to be at scale. And then in order to do it at scale just means there's that many more moving parts. So clearly you're preaching to the choir here and telling you that you're solving a problem, but maybe let's talk a little bit about some of the mistakes or some of the problems that ownership groups have when working with their property management, getting reports on time. Like what are some things you see, maybe the breakdown in communication or some other kind of common mistakes that occur in those relationships?
Yeah, I think, time and time again of what we see is, so one small step back, 70% of our clients are owner operators, meaning they're probably a syndicator or a wealthy individual, but more often a syndicator that is going out and buying the deal, but then also managing it. Okay.
Okay.
And so the reason I bring that up, and it relates to your question, is that, whether you're that person or you're a wealthy syndicator that's now hiring a third-party property manager, that's probably the more common scenario.
Sure.
People don't want a property manager. They want to do the deals, hire a local property manager. The
Right.
thing about in that case is you need to report on full financials back to your investors. When you go out and raise money and do a deal, you say, here's what year 1, 2, 3, 4, and 5 are going to look like. And here's my pro forma. And in my opinion, the good syndicators are reporting out either monthly or quarterly on here's actuals versus pro forma. The reality is the books that your property manager is keeping need to match, don't need the basis needs to match, in that like R&M needs to be properly booked to repairs and maintenance and not CapEx. CapEx needs to be booked properly. The right things need to be above and below the line on NOI. The property manager needs to add the budget into their system, the same budget that you gave your investors. Otherwise, now you're doing a bunch of manual manipulation on your end, and when your PM should be doing that. So I think, it's just so often the accountants, I'm going to say, take a step back. So often the people working at property management companies are bookkeepers. They're not actually accountants. And we always say, like, you need an accountant, not a bookkeeper. A bookkeeper knows how to add a bill. An accountant knows what general ledger account to use, whether it's R&M or CapEx. I keep using that example. A bookkeeper knows to pay the bills. An accountant needs to accrue for real estate taxes and accrue for insurance and book GPR and all these things that, we take for granted as syndicators. But I would wager to guess that 9 out of 10 bookkeepers at property accounting firms have no idea what you're talking about when you start talking about those things. Maybe the really big shops they do, but even then, the skills vary.
Yeah, I couldn't agree with that more. And again, well-kept books speak to my heart. Like I love, I'm a passive investor, as well as an active investor in a lot of deals around the country. And there's nothing better than the monthly email that comes and it has just a lovely spreadsheet or maybe just a PDF of like, hey, here's the accounting for the month, or maybe it's probably 2 months back, but whatever it is, it's great to see that. It's like, oh, this is well done. They know what they're doing.
Yeah, and what I would say, because I do the same passive investing now too, which is what I would say is, in your expectation, if I'm a syndicator, I want to just be able to share the stock reports from that property manager. I don't want to have to be doing a bunch of manual manipulation on my side. And that's how you really know if you've got a quality accounting team at the property management, is can you just take the P&L, the T12, the rent roll, and all the related reports and just send that out? Maybe you add some color as to here's what's going on with leasing. You're always going to do that as the lead GP. But if you're having to do a bunch of manual manipulation and change the numbers, I think you've identified a problem.
Right. Undoubtedly. Let's talk a little bit about the interview side of things. You know, as we're out here looking at property managers, as we are interviewing them, what things should we be taking into account from the accounting perspective?
Yeah, I mean, questions. I think about it from the best practices part from my side, which is, hey, easy, basic stuff. If we're collecting security deposits, do you have a separate bank account that you keep those all in that you reconcile every single month? So other things like, hey, are you guys doing balance sheet reconciliations every month? Which means, now we're getting into the weeds, but are you ticking and tying AR and AP and prepaids and all these things that, we do as an accounting team? I would want to know that the accounting team's doing that. How quickly are we going to expect financials? How many accountants are working on my books? These are the types of things I would be asking. If I was to GP a deal now and outsource it to a property management company, I would obviously be really in the weeds on that. But those are the types of questions I'd be asking.
Yeah, those are great questions, and again, it goes back to that: how detailed are they going to be? But again, going back to the property managers, their margins are oftentimes thin, and so I guess how do you navigate that when you say, okay, maybe they're a great property manager, but maybe their accounting is going to be slow, or I don't know. I mean, is there a way to kind of sort between or read between the lines on that and say, hey, this is a decent property management company, I can help them get their accounting done? Or is it just, hey, we're out of business because this just isn't going to work?
I think, ultimately, I always tell people, you're probably not going to fire your property management company because it's bad accounting. Maybe you will, but if their leasing's great, if the management's great, if retention's great, you're going to be able to kind of look over some of those things. Now, in terms of what our pitch always is to clients, which is, hey, look, we're cheaper than hire full-time. And most people don't realize, because we're 1099 contractors, and what most people don't realize is you think you need a full-time accountant, but you probably do not need a full-time accountant. We always say you need accounting outcomes, not an accountant. You need your bank recs done on time, you need your AP done on time, and you need the reporting out to your investors and clients on time. And if that means you're hiring us for 80 hours or 40 hours versus a 160-hour full-time person, I always challenge people on that, is you can hire us fractionally, get a higher quality, and deliver on the results that your clients are expecting.
Right. No, that's so true. So absolutely true. I love that. So you've got a deep history here, starting out as an accountant, then you've gone into fix and flip. You still presently own roughly 40 units. You're a limited partner in deals across the country. You are running your REA. What is that short for? I'm sorry.
Real estate accounting.
Duh, I'm an idiot. Real estate accountant. You're running that company. Like what's next for you? What's something on your horizon that you're really excited about?
Yeah, you know what we're really excited about right now is that as we've gone deeper in the accounting business, we had clients coming to us to say, hey, look, you guys are really good at accounting, but do you guys do any help with leasing? Do you do any help with maintenance coordination? Do you answer owner questions? And what we realized is, look, there's a really big opportunity here for assistant property management. And I can tell you why exactly. Earlier in the call, you said, how many units do you manage? I've managed 30 units in Chicago, and it was just me and a maintenance guy for the longest time. But then when I looked at what I was doing, leasing season was absolutely killing me. Posting the listings, somebody coordinating all the showings, somebody coordinating with the current tenant, when they come over, key exchange, filter change outs. I mean, I could go on and on and on and on and on. And so what we did is, in my own property management, I hired a virtual property management, because the vast majority of things can be done virtually. Yeah. And yes, you need an on-site maintenance guy. So we heard this from multiple clients. Can you help with non-accounting? Can you help with non-accounting? I knew I had the same issue in my business, hired the person, kind of proved it out. And now we're offering that as a service to clients to kind of go deeper than just accounting. We really see REA is conveniently REA, but we really see the whole umbrella as kind of real estate administration. So the kind of vision would be payroll, insurance. You can go really deep as to areas you can help. We started with accounting. Now we're focused on property management and kind of assisting clients in that journey. We have so many clients. We have some really big clients, big teams, but a lot of our clients are entrepreneurs that are doing everything, that are just starting to outsource pieces. They've outsourced the accounting to us, and now they're like, wait, I can go spend time growing my business, and you guys can do leasing coordination, and you can do maintenance coordination. And we say, yeah, that's what we do. And we think we have a unique competitive advantage because we're already doing it at our own business.
Right.
You know, we're not just accountants. We are actually people that have done deals, flipped houses, built new construction, managed property, syndicated deals. So we can kind of, 70% of our business is with people that own and operate, just because, we've kind of been in their shoes, maybe on a smaller scale.
Sure. No, I think that's great. What are some keys maybe as you look to scale that help you take on or tack on these new lines of business without getting distracted from your core business?
Yeah, I think that's you've heard all these stories, or at least I have, of people always want to go to the next shiny object. And that's why quite literally from the last 5 years, we've been hyper focused on accounting. That's all we've done. We thought about going into tax. We realized don't have a competitive advantage there. We'd be better off just referring it to tax CPA firms that specialize in that. This has just, we've talked about going into different parts of real estate, hotels, or, different sub niches. This just kind of, like I just explained, came naturally in that we had the problem in our own business. Clients are starting to ask for it, and just thought, look, we understand this business, and we already have a pool of clients that we can go pitch this into. So it was just kind of natural. So I think we have stayed really disciplined. And, I love focusing on a niche because it's really the same issues over and over and over and over and over again. And you get pretty darn good at addressing them.
Absolutely. Mark, this has been insightful. I certainly appreciate you taking the time to come on the show today. I mean, you guys are filling a void. You already know that, or filling a need. Fulfilling a need. I don't know which way you say that, but you're serving your clients well for something that obviously that you're aware of that we need here in the real estate, especially the commercial real estate space. So thank you for taking this head on and bringing what you do to the market. This is certainly awesome. If our listeners want to get in touch with you and learn more about you, what is the best way to do that?
Yeah, best place is go to our website, www.rea.co, not .com, but .co. That's the best place. There's a link to book a meeting with us. You can find me on LinkedIn. I'm active-ish there, but the website's the best spot.
Fantastic. REA.co. We'll make sure we put that there in the show notes. Mark, certainly appreciate you coming on today. Thank you so much for your time.
Yeah, thanks, Sam. Appreciate it.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much, and hope to catch you on the next episode.